Ripple XRP is a relatively new cryptocurrency, but the recognition and value it has gained with just taking the right steps makes us believe that it was planned all along. At the time it was created, the founders knew that it was going to replace the current collapsing financial system and become the one new innovative system. As the time is passing by, it is becoming more clear that XRP is going to take over. And now slowly, Congress is coming around to the front in favor of the cryptocurrency. Why is the Congress in support of cryptocurrency now? Is the dollar really going to vanish? Why is Ripple coming up with the regulations suddenly? Join us today as we reveal the real connection between Congress supporting Ripple and XRP. But before we start our video, welcome back everyone to Crypto Millionaires, a channel where you get your daily dose of XRP. If you like the content, do give it a thumbs up. And if you want to see more, then don't forget to subscribe to the channel and click the bell icon so you can know every time we upload a new video. Now, let's get to the subject. The crypto trial of the century has been among the headlines in the crypto market, and there isn't a single investor who does not know about this. The U.S. Securities and Exchange Commission sued the payment company Ripple, Garlinghouse, and founder and executive chairman Chris Larsen in December, accusing the company of issuing XRP coins to raise $1.3 billion in unregistered digital asset securities. The SEC's main argument is that XRP is a security, not a currency, and thus is subject to rigorous securities rules. It has been almost a year now, and we have not seen any clear regulation, or where is this case going? It seems that the SEC itself is not clear about what it is doing. Gensler, the new chairman of the Securities and Exchange Commission, said crypto could only become mainstream if authorities set clear standards, and he's targeting tighter regulation for the $1.6 trillion digital asset sector. But still, the SEC is not clear about the regulations. Now Ripple, whose executives have often been criticized by the United States for the lack of clarity, has outlined its own pragmatic framework. Ripple recently, in a blog post, unveiled its idea for a regulatory system in the United States that promotes innovation while protecting investors. Regulators should be encouraged to support innovation sandboxes. Some existing U.S. frameworks can be adapted to cryptocurrencies, and there should be an active conversation between regulators and market participants, according to the firm. Ripple CEO Brad Garlinghouse said, "Cryptocurrency and blockchain technology need clear regulatory and licensing frameworks designed to address and remedy the specific challenges to our industry. All of the proposed measures discussed in this framework aim to provide legal clarity to the industry, markets, and consumers in ways that a regulation by enforcement approach simply cannot." Now, on the same day when this regulatory framework was announced by the San Francisco-based payment company that is subject to the biggest crypto regulation of all time, financial services Republicans issued a press release. It was named as Committee Republicans Release Central Bank Digital Currency Principles. Principles outline how potential CBDC proposals should be evaluated. And just after that, Ripple issued its framework. We will connect the dots to show you how the two are related. But first, have a look at this press release. The principles were developed by Committee Republicans' Digital Asset Working Group member. They said, as we consider how issuing a U.S. central bank digital currency may fit this 21st century landscape, it is critical that lawmakers fully understand both the potential costs and benefits. That is why Financial Services Committee Republicans have crafted principles to ensure the discussion is focused on whether a Fed-issued digital currency addresses the problem, rather than creating one. What they are focusing on and what they are sure of is that the cryptocurrencies are not creating the problems, rather they are solving the existing ones. Just take the example of Ripple. It has brought the solutions to the problem that the banks and financial institutions have been tackling for years. The faster and cheaper cross-border payments, Ripple's on-demand liquidity, the remittance solutions, and many other use cases that it offers has made the lives easier. Its connection with the central bank's digital currency is its key for mass adoption and the worldwide recognition. The press release also said, first and foremost, the US dollar and payment system must remain the best in the world. To accomplish this goal, we must not stifle private sector innovation and competition. The ball is in Congress's court, as the Federal Reserve cannot issue a digital currency without congressional authority, and Republicans will continue to fully assess how Fed-issued digital currencies could impact our nation's competitiveness and our financial system. The principles related to stablecoins said that stablecoins hold promise as a potential cornerstone of a modern payment system, if issued under clear regulatory framework. If Congress contemplates authorizing the use of a Fed-issued digital currency, it should not impede the development and utilization of stablecoins, both those currently in circulation and those yet to be developed. Now, the most important point that connects it all: digital currency policies must promote private sector innovation and foster competition to ensure the United States maintains the world's leading payment system. Congress and regulators should recognize the unique nature of these innovations and establish a regulatory framework that targets the activity and not the technology. The regulatory framework from Ripple is now all making sense. Thomas Emmer, who is an American attorney, lobbyist, and politician, was also discussing this on Twitter. He said any central bank digital currency must maintain America's global leadership and allow private sector innovators to lead the way. But most importantly, it must be open, permissionless, and private like cash. Ripple said that only open communication and collaboration between private and public sectors will allow for the development of an efficient policy framework for cryptocurrencies. That is why Ripple has proactively discussed the matter with regulators and members of Congress on a national basis. These discussions have shaped the views on the regulatory clarity that the industry and broader ecosystem require from regulators, as well as the types of restrictions that regulators should impose on the industry. This proposal expresses Ripple's ambitions for a regulatory framework that allows cryptocurrency and blockchain technology to reach their full potential. Previously, Jerome Powell has also been talking about the public and private sectors working together. According to Ripple, the bill, which requires the establishment of a collaborative working group, consists of appointees from the Securities and Exchange Commission, or SEC, and the Commodities Future Trading Commission, or CFTC, as well as representatives from fintech companies, financial firms, and small businesses. Passed the House and remains pending in the Senate. Now, this work could provide Congress with additional information and clarity to protect against regulatory overreach and issue proper market oversight mechanisms are in place without being too constructive. A collaborative forum that brings regulators and industry stakeholders together to build a rational and holistic framework for cryptocurrency and blockchain together would represent a step forward toward achieving regulatory clarity. This all is not just a coincidence. Even the working group member, Patrick McHenry, can be seen in both of the documents. The reason this lawsuit is important is because this is going to tell us whether the U.S. is in favor of cryptocurrency or against it. If Ripple wins, then the crypto will be in safe haven, and XRP will be the leader. But if the SEC wins, then the innovation will be moved overseas, and the U.S. will fall apart. And this is not going to happen. Ripple has to win in order for the U.S. to remain the global reserve currency. Members of the Congress's Joint Economic Committee are of the view that comprehensive regulations of cryptocurrency and other digital assets should be a priority, as their popularity and quick growth poses a threat to investors and the broader financial system. According to Capital.com, how to handle digital assets and cryptocurrency is an issue all of Washington is grappling with, from Congress to the Securities and Exchange Commission, or SEC, to the Treasury Department, much to the frustration of Republicans and the industry. The Joint Economic Committee is one of 4 standing joint committees of the U.S. Congress and is responsible for reporting the current economic conditions of the United States and for making suggestions for improving the economy. According to the CoinMarketCap, at the time of writing, the XRP price today is $1.05 USD, with a 24-hour trading volume of $5.5 billion USD. XRP is down 4.79% in the last 24 hours. The current CoinMarketCap ranking is number 7, with a live market cap of $49 billion USD. It has a circulating supply of 47 billion XRP coins and a max supply of 100 billion XRP coins. So guys, this is it for today's video. I hope it could be a big help to you. What do you think about the Congress's support for cryptocurrency? Share your views in the comments down below. Don't forget to click the bell icon, and thanks for watching.